All right, going into specific spending recommendations. Let me just give you an overview here relative to the average American and average spending. So let's think about where you are relative to the average. So the average individual American is earning about $50,000 a year in pre-tax income and spending $46,000 a year. So if you're spending more than $46,000 per year, by definition, you are living above the average. Let me say that again. If you are spending more than $46,000 a year, you are living above the average. So don't give me this, I'm so deprived, I have nothing, all this stuff. If you are spending more than $46,000 a year, you are living above the average. So if that is the case, you almost certainly should be able to find ways to trim back. So in order for you to benchmark yourself appropriately, you need to know how much you're spending. And if you don't know that yet, you'll have to use some of the apps that I'm going to talk about and figure out how much you've been spending and how much you spend on a monthly or an annual basis to see where you come in this chart here. But the point is, like I said, it's almost guaranteed that you're able to find ways that you could trim back. So just looking at a cross-section that the average American is spending. So the reason this is helpful is because you want to find out where you're way over the average, because that might point out where something is out of whack for your finances. If you don't know how other people are doing it, you don't know what you're doing right or what you're doing wrong. You also want to find out where you could start to do better than the average and save even more. So here's a pie chart breaking down the spending behavior of the average American that's spending about $46,000 a year. The breakdown kind of goes like this. Essentially, it's 35% housing, 20% transportation, 15% food, 10% healthcare, and 20% everything else. So the biggest things to really think about are housing, transportation, food, and then all the discretionaries on top. But the way this breaks down in numbers is that the $46,000 a year translates to about $3,800 per month in expenses. So like I said, the biggest expense that people have is generally housing, which comes out to over $1,300 a month all in. So benchmark yourself against that, see where you're at. If you're way over that and you're not in an expensive city, look to see if you can cut that down. If you're way under that, great, keep it up. Then transportation. Now remember, this includes everything. So if you have a car, this is your monthly cost of your car depreciation, your gas, your insurance, everything all together, your transportation costs. That's usually about $750 a month. The biggest way to save on transportation is really just spending less on your car, like having a less expensive car. But anyway, that comes out to about $750 a month. The third thing is food that people spend about $500 a month on. That usually comes from eating out at restaurants and that kind of stuff. So the top three categories of housing, transportation, and food make up 2/3 of the average American spending. Think about that. These top three things make up 2/3 of the annual spending. So that's where changes can have the biggest impact for you. Instead of worrying about all the tiny little stuff, if you make sure that you're getting a great deal on rent, aren't spending too much on your car, and are spending money wisely on food, that's going to go a huge way for you in saving money that a whole lot of effort in other areas is not going to pay off nearly as much. So I want to give you specific ways that you can save a lot of money, because I don't want to leave it vague and open-ended. I want to give you guidance so that you can go out and do these things for yourself. So I'm going to give them to you in categories. I'll give you ones on debt, then I'll give you ones on housing, then ones on transportation, then ones on food, then ones on your telecom type stuff. Specific ways you can save money on debt. The first one is that you can refinance your student loans. This one is huge. Refinancing your student loans at a lower interest rate can save you a ton of money. A ton of money. Seriously. Like, the bigger your loans are, the bigger the difference the interest rate is going to make. A little caveat here though, you only want to refinance if you can get a lower interest rate. There's no point in refinancing if you're going to get a higher interest rate. But right now, where interest rates are, you can usually refinance at a lower rate and save a lot of money on interest. So let me give you an example. Let's say you're stuck with $75,000 of student debt from school and you're paying 7.5% interest on it and have 10 years left on your loan repayment schedule. So what that means is that over the course of the next 10 years, as you're paying it off, you'll end up paying $31,800 in interest, which is money just down the drain. That's a lot of money. But if you were able to refinance at 5% instead of staying at the 7.5% interest, you'd end up only paying $20,500 in interest. So that alone, just by refinancing at a better rate there, you'd save almost $11,400 just by refinancing at that better rate. That's pretty awesome, right? That's a big difference with very little effort on your part. So ineffective Ivan pays $31,800 in interest. Effective Evan only pays $20,500 in interest, saving $11,400. So ask yourself, would I like to save $11,000? I'm guessing the answer is yes. Go and refinance your student loans. Search it on Google, check bankrate.com or NerdWallet or wherever. Investigate refinancing your student loans. Here's another look at the example from different interest rates. So if we're just taking your 7.5% as a baseline, if your interest rate was 1% higher, you'd actually pay another $4,800 in interest. But if you were able to get it down 1% to 6.5%, you'd save $4,600. If you got it down to 5.5%, you'd be able to save $9,100. If you got it down to 3.5%, which would be pretty amazing, you'd save almost $18,000 alone just by the refinancing. That is incredible. But remember, you only want to refinance if you can get a lower rate than you currently have. And then the other thing is, make sure to do a fixed APR, not an adjustable APR, because that's what happened and that got a lot of people into the housing crisis in 2008. They had adjustable ARM mortgages on their homes, and then when interest rates went up, their rates went up and their payments went up, and they couldn't afford it because they weren't planning on it. So make sure you get a fixed APR on your student loan if you're going to refinance. So go ahead and get started on that. Just search refinance student loans in Google and check at least 3 different refinancing sources and then go from there. Another specific way you can save money on debt is to pay off your credit cards as soon as possible. Like I said, some of these things are going to overlap with the philosophy lessons we talked about in session 2 and the strategy trivia we talked about in session 3, but I want to make sure it sticks in your mind and you really hear it and you really go out and do it. So if you pay off your credit cards completely and make sure they're completely paid off every month, it's going to make a huge difference on how much you end up paying in interest and how much money you end up just throwing down the drain and throwing away. Here, let's look at some numbers. So let's say you were sitting on $5,000 of credit card debt on cards that were charging 20% interest. So if you made the minimum payments each month, you'd only pay $133 a month. But the thing is, it'd take you 277 months or 23 years to pay it off. That's like half the rest of your life on just the original $5,000 that you had in credit card debt. That is obscene. You'd end up paying $7,700 just in interest on your $5,000. That's so much money down the drain. Credit cards are not free money. Listen to me. Credit cards are not free money. So if you're ineffective Ivan, you're throwing $7,700 down the drain to interest. But instead, let's say instead of putting $133 a month towards the minimum payments on the credit cards, let's say you put $500 a month towards paying off the credit cards each month. You'd end up paying it off in 12 months, and you'd only pay $515 in interest. What? That's ridiculous, right? You might ask yourself, like, how can that be? But the thing is, the interest is so high and it accrues so fast that if you're not paying it off, it never gets paid off. But if you pay it quickly, you don't earn the interest and you just pay what you borrowed originally, mostly. So effective Evan would essentially pay $500 in interest and save $7,200 just by paying off the credit cards faster. So ask yourself, would I like to save $7,000? I'm guessing the answer is yes. Pay off those credit cards as soon as possible. If you want to check out this calculator that I'm showing you here, go to bankrate.com and you can plug in numbers and check it out for yourself. So just to recap on specific ways you can save a ton of money on debt-related things, you can refinance your student loans and pay off your credit cards as soon as possible. Those two things are going to save you tons of money in interest. Now talking about specific ways you can save money on housing. The first way is to get a roommate. So remember, housing is usually people's biggest expense, like 35% of their spending, which is a little over $1,300 a month. And that translates to almost $16,000 a year in housing costs. But let's say you were able to find a way to be paying only $750 a month. That'd save you over $6,000 a year versus if you were paying $2,000 a month, that'd cost you an extra $8,400 a year on top. So it just boils down to this. The easiest way you can save money on your housing is to get a roommate. When I moved to Houston, at the apartment complex I was looking at, I had a choice between a one-bedroom for about $1,000 a month or a two-bedroom for $1,300 a month. What I ended up doing was getting the two-bedroom and then renting out the spare room for $700. So it only cost me $600 a month plus utilities to live in a nice apartment complex, and I effectively saved about $5,000 a year in that choice alone. So if you have ineffective Ivan renting at $1,300 a month, and then you have effective Evan renting at $750 a month, he's saving $6,600 a year. Would you like to save $6,000 a year? I suspect yes. Go and get a roommate. Another specific way you can save money on housing is to move to a cheaper part of town. So here's a map of Houston, and the darker areas are the more expensive ones, and the lighter areas are less expensive ones. Obviously, in big cities, it's all about being in the center of things and that kind of thing, but you do have options. But one thing I want you to notice is that some parts of town in Houston are 3 times more expensive than others. Obviously, you don't want to live in a dump or be in a dangerous part of town or be super far away from everywhere that you want to go, but you usually have options. So if you're flexible and you look for quality and special promotion deals, you can find a happy balance between a good part of town, good quality, and good price. And seeing as there's a 3x difference between the most expensive parts and cheaper parts, that can make a huge difference. The third specific way you can save money on housing is to negotiate your lease with your landlord. This one's not going to have as big of an impact as the others, but it's just another suggestion that I have for you that you could knock off maybe $50 or $100 a month, which could maybe save you $1,000 or $2,000 a year. So that ends up being extra money in your pocket. So that's on the table as well. So the 3 specific ways that I'm recommending that you can save money on housing is that you can get a roommate, you can move to a cheaper part of town, and you can negotiate with your landlord. Now talking about specific ways you can save money on transportation. A huge way is that you can buy a used car instead of a new car. So when you're buying a car, make sure that it's not brand new. Remember from session 3, we used the example of a car when talking about stretching your dollars effectively. So I'm going to use it again here because it's a really big one. So as you can see from this chart here, cars lose value so quickly. After 3 years, they've lost almost 50% of their original value. But in real terms, a car is not half dead after 3 years. You can use a car for much longer than 3 years or 50,000 miles or whatever. Cars last way longer than that. You can drive a car 150,000 miles, easy. So basically, that means that cars lose financial value a lot faster than they lose actual utility usefulness or utility value, which means you can save a lot of money from buying a car that's a few years old as opposed to brand new. So if we think about a brand new car that would cost $25,000 or the same car after 3 years, on average, it's only going to cost $13,500 instead of $25,000. So ineffective Ivan is spending $25,000 on the brand new car. Effective Evan is spending $13,500 on a 3-year-old car and saving $11,500. So that'd save you $11,000 on your transportation. Second specific way you can save money on your transportation is to drive your car or keep your car longer than you have in the past or that you are inclined to. So let's be honest, I doubt you drove your last car until it had 250,000 miles on it. If you did, good for you. Not many people are doing that these days. Now, of course, there's a point where it becomes more expensive to fix a car than it's worth, but remember, most of the cost to us for a car is the depreciation of the car losing value in the early years. So I want to challenge you, if you only kept your last car for 4 years, or until it had something like 60,000 miles on it, and then you got tired of it, try keeping your next one, or the one you currently have, until you hit 100,000 miles. Or if you had the last one until 120,000 miles, try keeping this one until you hit 150,000 miles. I mean, the thing is, cars last a lot longer nowadays than they used to, so 150,000 miles should be just fine on most cars, no problem. So you don't have to worry about that. Like, the car runs, it works. They're going to work well into 150,000 miles. So just think, if you're forking out $10,000 to get a car every 4 years and then trading it in for not that much money, that's effectively costing you $2,500 a year. Yeah, straightforward. 10,000, 4 years, $2,500 a year. But if you're paying the same $10,000 for a car, but only getting a replacement car every 8 years instead of every 4 years, that's cutting your cost in half from $2,500 to $1,250. So you're saving half the cost just there by driving it longer. So ineffective Ivan is replacing his car every 4 years. It's costing him $2,500 a year. Effective Evan is replacing his car every 8 years. It's only costing him $1,250 a year, and he's saving $1,250 a year. Obviously, I'm oversimplifying here, but you get the point. Another way you can save some money on transportation is to switch car insurance providers. So this one's a little funny because car insurance companies actually have a nasty habit of increasing your premiums. I don't know if that's just because it's required by law that you have car insurance or what, but if you stayed with the same insurance for several years, they've probably walked up your premium higher and higher each time you renewed the policy, and you might not even have realized it. And you thought, I didn't remember it being this high before, because it probably wasn't. So what you should do is go and shop the market. Do a quick side-by-side comparison of the same coverage across several providers, and you'll usually be able to save money by switching. So the next time it comes up for renewal, instead of renewing, go switch over to the competitor. Like, if you're with Geico, switch over to State Farm. If you're with State Farm, switch over to Progressive or whatever, because they all provide the same service. It's just a matter of the cost. Not only that, the other thing on top of just them raising up the rates on you is that insurance providers love to load you up on things that you won't use so that they can make extra money off of you. So you have to evaluate whether or not you actually need or want all the things that are in your policy. If you're not using the AAA service, why are you paying for it, kind of thing, you know? So just go search on Google, compare car insurance, and use a comparison tool, and you could easily save yourself $1,000 a year on switching car insurance. This one's not that big, but it explains a principle that I want to share with you. One thing when you're paying for car insurance is they'll quote you a 6-month premium, but they'll offer for you to pay on a monthly basis. But if you're given the choice to pay $75 a month on your premium or pay $400 for the whole 6-month premium, which one is a better deal? If you do the math, $400 for 6 months comes out to $67 a month. So if you pay the 6-month premium all in one shot, you'd actually save over $100 a year just by paying on the 6-month basis instead of the monthly basis. So that's a super easy way to get a 10% discount and save some extra money there, just by paying it in blocks instead of paying it on monthly basis. And sometimes that applies to other things, not just car insurance, where they'll offer you to pay in a big block or on a monthly basis, and paying on the long term gives you a discount. So just to summarize the specific ways we've mentioned about saving on transportation, you can buy a used car instead of a new car. You can drive your car longer. You can switch car insurance providers, and you can pay your insurance premium in 6-month blocks instead of monthly. Now to cover some specific ways you can save money on food, the first way is to buy groceries instead of eating at restaurants. I think we all know this one. It's just a matter of actually doing something about it. But really, we eat out a ton, and it keeps growing. If you look at this graph here, over the last several decades, it's grown more and more in terms of how frequently we're eating out and how much we're no longer eating at home. The amount we're eating out is actually starting to surpass the amount we're eating at home. Like I said, everybody knows this pretty much. It's just a matter of actually doing something about it. But so just comparing apples to apples here, if you eat out 5 times a week and your average cost of a meal when you eat out is $15, that costs you almost $4,000 a year. So I'm not talking about all your food costs. I'm just talking about the eating out part. But if the grocery store meal cost for you averages out to $7.50 a meal, that means it costs you half as much as eating out. So if you replaced all those meals that you had eaten out, you'd save $2,000 in a year. I'm not saying that you should never eat out, but if you make it less frequent or that it's more about special occasions instead of the norm, that can go a long way. And if you're saving like $2,000 on food, that's a lot of money in your pocket. So ineffective Ivan, eating out all the time, spending $4,000 a year on eating out. Effective Evan, eating out infrequently, spending $2,000 a year, is then saving $2,000 a year. Another specific way you can save money on food is to buy the generic or no-name brand on groceries. Grocery stores have gotten really good at this. The grocery stores copy the same product but put their own label on it and put it right next to it in the grocery store and put it at a cheaper price. And you can save 20 to 40% on generic brands versus the premium brands. That means that can cut your food bill from $5,800 a year, like we said the average person is spending. And if you only paid $4,200 a year, that'd save you $1,600 in a year, just by buying the generic brand instead of the premium brands. So you get pretty much the same thing and save $1,600 a year. So ineffective Ivan buys premium brands, spends $5,800 a year on groceries. Effective Evan buys the generic brands instead, only pays $4,200 a year and saves $1,600 a year. So the two specific ways we've mentioned about saving money on food is buying groceries instead of eating as much at restaurants and buying the generic brand instead of the premium brands. Last category, specific ways you can save money on your telecom stuff is to switch your cell phone provider and then get on a family plan. So I've actually found that people really throw a lot of money away here compared to the options that are out there. People end up paying way over $100 a month on their cell phone when there are plenty of good providers who will give you unlimited everything for way, way less, like $50 a month or even $40 a month. You get the same thing, but you save $600 in a year. So if you have ineffective Ivan paying $100 a month on his cell phone plan, $1,200 in a year, and then you have effective Evan who's only paying $50 a month and paying $600 a year, he's saving $600 in a year. Another way you can save money on telecom is to cut your cable. There's so many streaming options nowadays that content is available everywhere, and a lot of places it's free, but even places where you're paying for it can be way cheaper than just having traditional cable. If you're still paying for cable, I'm not really sure what decade you're living in. There are so many options that are way cheaper. I mean, cable might be costing you $80 a month or something, or even more, depending on what you're paying for. Whereas if you switch to, say, like Netflix and then Sling together, that only costs you about $40 a month. And then you're saving 50% there. So you're talking another $500 in a year that effective Evan is saving over ineffective Ivan. So the specific ways to save money on Telecom is to switch cell phone providers and cut the cord on your cable. So we talked about a bunch of very specific ways you can optimize your spending and supercharge your ability to reach the goals that you've set for yourself. Remember these as you're going through Challenge 4 so you can decide what you want to implement for your own situation. You don't have to use everything, of course, but these are ways that can really help you to save a bunch of money and meet your financial goals faster. Okay, so to wrap things up, I want to show you some apps that can help you automate your finances and really help you to get on easy street with your savings. The point is, there are several things with your finances that you need to be doing one way or another on an ongoing basis. So if there's a way for you to automate that, it's going to save you a lot of time and headache if you go ahead and automate it. So using financial apps will really save you so much time and make things so much more manageable. You'll really appreciate this part. So I have a standalone video for each app that I'm recommending, so you can go and check those out one by one right after this and follow the step-by-step instructions that I lay out in those videos so you can get set up and start utilizing each app as part of your personal finance arsenal. The point is, the specific things that I want you to automate are: one, to automatically aggregate your financial information into one place. It can be really overwhelming to stay on top of your finances when you have a million different bank accounts, credit cards, and loans out there and so on, so it makes it hard to keep track of everything. But by using an app that aggregates all that information into one place automatically, it makes it so much easier to stay on top of everything. Two, I want you to automate your budgeting. The less decisions you have to make on an ongoing basis, the easier it is for you. By using an app to automate your budgeting, you'll know if you're staying where you need to be without having to constantly be checking envelopes or some other convoluted system. Three, I want you to automate your saving. If you have an app that is squirreling away money automatically without you even having to think about it, you'll feel like you don't even have to do anything to save money. It's going to make it amazing. You'll just be sitting there and spending money and not even realizing it, and all of a sudden you're saving money. So that one's really, like, having an app that automatically saves for you is going to be an absolute game changer for you. So if you're struggling to save money, you hands down need this. Automate your saving. 4, I want you to automate your credit card payments. Remember I said it's best to remove temptation. Credit cards can be a temptation for you if you're spending too much. So by automating your credit card payment so that it's deducted from your account as soon as you spend it, you won't be able to have that temptation to feel like you have extra money from your credit limit. So that's actually another great tool for discipline that helps you clamp down on that behavior. And then 5, I want you to automate your investing. Once you automate your investing, this will put you into the big leagues, the same as everyone else. But the best part is that you don't have to know anything. You don't have to know what you're doing with investments. You get the same results as the pros. It's actually kind of amazing. Because of the miracle of technology nowadays, you can be doing as good as the pros. You don't have to know anything. It really is that simple. So I'll show you that. Get set up with that. It's going to make it amazing for you. Now talking about goal revisions. You've set your goals. I've given you spending tips that really can increase your saving speed. You're going to go and get set up on some of these financial apps, and that's going to enable you to tinker and revise your goals. So your goals plus these tips plus these apps is going to help you get to revised goals. So then comes the execution and the follow-through. You'll use your revised goals and combine that with your plan, and then combine that with automation and then accountability to then reach your goals and achieve success. So that's what we're really shooting for here. We're starting with your goals and we're getting you to success in the end. You'll be amazed how easy and empowering it will feel. So Challenge 4 is about implementing some of my recommendations. I want to help you to reach your savings goals faster by adopting high-impact, low-inconvenience spending changes. So Challenge 4 is about getting set up with the apps, choosing spending recommendations to implement, and revising and enhancing your goals. So that's it for Session 4. We've covered optimization I hope this stuff means a lot to you. Go ahead and do each of the apps one by one, get set up with the apps, and that'll get you on the fast track to automating your finances. See you back for the last session in session 5 next time.